Hey everyone. So the electric vehicle market, it's in a really weird spot right now. You look at the global picture and it's just this story of explosive nonstop growth. But then you zoom in on the US and it feels like it's hitting some serious speed bumps. So what's really going on? Let's get into it.
Okay, let's start with just one number, 7.5%. In the first part of 2025, that's the slice of the entire US new car market that EVs managed to capture. Now that is up from 7% the year before, which, sounds like progress, right? But as you're about to see, that single number is hiding a much more complicated reality.
Because, while the US market is kind of inching forward, the global scene is a totally different story. To really get why the American market is struggling, we first have to zoom out and just appreciate the massive surge in EV adoption that's happening all over the world.
And the numbers here are just staggering. The research firm Romotion is projecting the global sales of both fully electric and plug-in hybrid vehicles, the ones that have a battery and a gas engine. They're on track to hit 20 million this year in 2025. That's a jump of over 17% in just 1 year. The momentum globally is just undeniable.
Now, this is where it gets really interesting. Take a look at where all that growth is coming from. China is projecting a 40% jump. 40%. Europe is looking strong at 15%, and the US, well, it's projected to grow by 16%. But it is crystal clear that China is the absolute engine powering this whole global boom.
So, with that in mind, let's bring it back home to the US. Because that 16% growth projection you just saw, that comes with some pretty serious asterisks. Here, the story is this weird mix of genuine growth running straight into some major headwinds.
And this slide right here, it perfectly captures that tug of war. On one side, you've got the rocket fuel. Sales were up over 11% in the first quarter, cool new models are hitting showrooms, and one big automaker nearly doubled its EV sales. But on the other side, you have this giant anchor. We're talking 25% tariffs, a lot of policy uncertainty, and even the market leader, Tesla, saw its sales drop by 9% year over year. It's a real push and pull.
And these headwinds are no joke. We're not just talking about tariffs on the cars themselves, but also on the essential stuff needed to build them, things like aluminum and key battery supplies. And that sales drop for the market leader I mentioned, it was actually even steeper if you look at it from its 2023 peak, a 26% fall. All of this just creates this fog of uncertainty that makes it so much harder to figure out what's coming next. So with a market this complex, this messy, how are companies supposed to navigate it? Well, let's put a spotlight on two very different strategies. Basically two totally different bets on where the future of this whole industry is going.
Now, the source material for this explainer started out with his super ambitious goal. It wanted to find EV-related companies with an average 5-year revenue growth of over 20%. But what they actually found is maybe even more telling about the true state of this market right now. First up, the automaker, General Motors. And right away, you see that market reality check. Its average 5-year revenue growth is just under 7%. That's nowhere close to that 20% target. But that doesn't mean GM isn't making some incredibly aggressive moves to try and own the future. And it is a massive push. In the first quarter of 2025, GM's EV division grew over 90% from the year before. That vaulted them into the number 2 spot for EV makers in the entire country. They're grabbing market share, they're buying up autonomous driving tech with Cruise. This is the all-in strategy of betting big on the cars themselves. Okay, now for our second example, which takes a completely different path. This is Albemarle, a key supplier. And again, notice its growth rate, just under 8%. So it's also falling short of that 20% goal, but it's playing a very different, and you could argue, maybe even smarter long game. Albemarle's power play is all about the raw materials. They are the world's largest producer of lithium for EV batteries. They are indispensable, so they're planning to nearly triple their production capacity because they know that global demand for lithium is set to more than double by 2030. So when supply chains get tight and lithium prices go through the roof, Albemarle's in the perfect position. This is the strategy of betting not on the final car, but on the essential ingredients that make the car possible. So we've got these two really distinct strategies, right? One betting on the finished car, the other on the raw materials. What does this tell us about the big picture? And, well, what's next for this EV revolution?
I think this quote from Iola Hughes over at Romotion really just nails it. Despite all the short-term noise, the tariffs, the sales fluctuations, all of it, the fundamental change isn't really in doubt. The shift is happening, and growth is still the long-term story here.
So the key takeaway from all this is pretty simple. The EV transition is real. It's coming, but the road to get there is going to be bumpy. It is absolutely not a simple straight line of growth. The real winners are going to be the ones who can navigate this complex push and pull we've been talking about today.
And that leaves us with a final and I think crucial question. In a market this complicated, where does the real opportunity actually lie? Is it with the companies like GM who are building the finished product that captures everybody's imagination? Or is it with the companies like Albemarle who are controlling the irreplaceable materials that make the entire revolution possible in the first place? The answer to that question is probably going to define the next decade of the auto industry.